Let's take a look at the global market highlights and news for March 18th, 2014. Markets ignore turmoil in Crimea. Oil continues to decline. The Federal Reserve meeting begins later today. Let's take a look at the market now. Wall Street gained more than 1% on Monday, rebounding from a steep drop in the previous week as concerns eased over the situation in Crimea, even as the region voted to join Russia. The 97% vote in Crimea in favor of quitting Ukraine was condemned as illegal by Kiev and the West, with the White House calling Russian actions dangerous and destabilizing, though the referendum passes without violence. The Dow Jones was up 182.59 points at 16,248.26. The S&P 500 was up 1.04%. The Nasdaq gained 49.35 points. U.S. economic data helped support equities and the U.S. dollar. Industrial production rose 0.6% in February, while above the 0.2% increase forecast by economists. The Empire State Manufacturing Index rose 5.6 in March from 4.5 in February, below forecast for 6.5, but still a rise. In corporate news, Chinese e-commerce giant Alibaba Group Holding said on Sunday it would begin the process towards a U.S. initial public offering, ending months of speculation. Shares of Yahoo, which has a 24% stake in the company, jumped 3.2% to 38.81. Russian stocks traded firmer on Monday, though came off early highs in the wake of preliminary results of Sunday's referendum that showed an overly positive vote by Crimeans to join Russia. The blue chip MySec index rose 0.3% to 1244, which was off of 1% gain seen earlier on Monday. Last week saw the index close with a 7.4% loss as tensions rose ahead of the Crimea vote. Europe's benchmark stock index posted its biggest gain in almost 2 weeks on Monday, as initial sanctions against Russia weren't as tough as some analysts had feared. Germany's DAX gained 1.4% at 9180.89. The UK's FTSE 100 added 0.6% to 6568.35. In the foreign exchange market, the U.S. Federal Reserve's massive stimulus program has helped keep a floor under equity prices, and market participants are looking ahead to a two-day meeting of the Fed's policy setting committee, which begins today. The Fed is unlikely to deviate from previously announced policies, but it could use the meeting, the first with Janet Yellen as chair, to map out its plans for rate rises. The central bank has said that the first rate rise is likely to come around the middle of next year, as long as the U.S. economy keeps healing. The dollar fell against the euro on Monday after the U.S. and European Union announced a round of sanctions against Russian officials. The euro rose to 1.3933. The dollar rose to 101.58 yen. The ICE dollar index, a gauge of the currency's strength, fell to 79.326 from 79.406. Moving to the commodities, gold prices briefly hit their highest in 6 months as appetite for risk remained cautious following Crimea's vote to break from Ukraine's and Western countries' sanctions on Moscow and Kiev officials. European Union foreign ministers have agreed to impose sanctions, including travel bans and asset freezes, on 21 officials from Russia and Ukraine, Lithuania's foreign minister has said. The price of oil fell only slightly to near $98 a barrel after Crimea's vote to split from Ukraine and join Russia, a development already anticipated by investors. Worries about slowing demand from China, one of the world's top energy consumers, as well as the availability of plentiful crude supplies on global markets, have also contributed to falling prices in the past several days. This is Amy Anderson from Option Rally signing off. Follow me on Facebook. And of course, I'm waiting for your like below if you enjoyed today's Market Watch. Have a great week.